Hey everyone, Ben here and welcome to Motivation to Invest. In this video, I'm going to reveal to you guys my top 3 UK stocks. Now, this is a question I get asked so much on this channel. So in this video, I'm going to answer it for you guys. I'm going to dive into the business model, stock analysis, deep dive valuation, and reveal my buy points for my top 3 UK stocks. And one of these UK stocks I've actually previously invested over £50,000 into, and I've actually profited around £20,000 around a couple of times so far. So this is going to be a really interesting video, guys, because that stock's at a major correction right now. So be sure to watch this video all the way till the end, guys, and I think you'll like what I've got for you. Before we hop right into it, if you do like these investing tips and exclusive stock market picks, of which I'm personally investing into, then feel free to join the investing family if you haven't already by hitting that subscribe button, turning that notification bell on. If you do want to step up your investing game and become financially free, then why not check out that first link in the description below for our ultimate investing strategy course, or maybe even that second link in the description below for our VIP membership group, where you can join a thriving community of investors and also get access to my live buy and sell signals. And with that being said, let's dive in. Kicking things off at stock number 1 on my list is Boohoo, ticker symbol BOO. This is on the London Stock Exchange on the AIM FTSE 100, and is the largest company on the AIM Stock Exchange. So what does this company actually do? Well, this is a company I've covered many times before on this channel. It's a fast fashion retailer. As you can see here, this is their website. They've always got 70% off. They have a great influencer marketing team. They partner with various celebrities or minor celebrities, such as people on Love Island, various other programs, and basically using that method of influencer marketing, they get great sales in their clothes. They've even partnered with major celebrities such as J-Lo, Mayweather, and many, many more. For example, here's one of the founders here, Umar Kamani, who's actually the founder of PLT, Pretty Little Thing, which is part of Boohoo now, the major sort of fast fashion conglomerate. And he's with one of the Kardashians here. You can see him here with P. Diddy and one of the Kardashians here. So yeah, it's basically this influencer marketing style which helps to actually boost sales for the company. But hopping into the share price, we can see it's been an absolute roller coaster. Now, I've covered this stock multiple times because it's just so volatile. So this is not a stock for everybody. They're this fast fashion retail. They're e-commerce, so they're purely e-commerce. They have no retail locations, which is great for the way the trend has been going, especially which was accelerated during 2020. And hopping in right here to the share price, I'm just going to talk you through the few scandals I can remember in the past year, I'd say. So of course we had 2020, everything was going pretty well. The stock was actually priced January 2020 around £3 per share. Then, of course, we had the global pandemic. No fault of this company, actually benefited this company. But the stock did drop, of course, 44%, which many companies did, so I don't really hold that to this company. But that was actually a prime buying opportunity, of which I did buy right then. And I bought down here, and then it actually rebounded by 127%. So I covered that on this channel. We got some major gains on this channel during that point. But then the stock corrected again. So this was a major plummet here. I believe this time might have been the short seller report, which I actually read through and it actually turned out to be complete BS. So that still caused the stock to drop minus 44%. But then again, guys, the stock recovered up 63%. And then there was the Leicester factory scandal, I believe. So basically a company like Boohoo, they're this fast fashion retailer. Their goal, their main competitive advantage is to actually get these clothes from the runway to their stores online as fast as possible. And during the pandemic, it turned out that they stated that they were paying many of their people in their shops below actual fair value. So that is something which actually was investigated by the company. They did address it really well. I personally thought, like, there's only so many times you can apologize and say you're going to address it, but it still kept getting brought up again and again and again by the media, and this caused the stock to plummet. And actually, I found out it was a systemic issue with the entire fast fashion industry. So it's not just this company which is actually having this issue, it's all the companies in the fast fashion industry. It's just this company was actually the poster child for it, and that's why the stock took an absolute hammering. So hopping back in here, the stock did recover from that point. So it did recover back up there, 63%. And each and every time that stock has dropped, I've actually dived into the company and I've analyzed, have the fundamentals changed? Because that's what you should look at. When a stock drops, when there's bad news about a company, ask this single question. Has the fundamentals of the business actually changed? Is this going to materially impact the sales of the company? If the answer is no or very minor, then usually it's a great buying opportunity, and volatility can often equal opportunity. So the latest two scandals: the Boohoo founder Mahmood Kamani is ordered to appear at an LA court over pricing round. They're basically stating through a series of emails that the founders actually stated that they have inflated prices, and they do a big sale, and they have inflated prices again. But personally, I see that that's what every single retailer does anyway, so it's not really a major issue. That's just what they all do. Then will the founder of the company be personally liable, or will the company be liable? And if so, will the company have to pay millions and millions of dollars to this LA court? So it could affect the fundamentals slightly. This company's got a strong balance sheet at the moment, so I'm not personally too worried about that. Don't just take my opinion, guys. We're going to hop right in to my deep dive valuation model. Now, the company's currently got revenues, guys, of £1.7 billion. The margins are not massively high, I believe around 6-7%, $124 million, but they are slightly higher than many other players in the industry, which is great to see. I've been quite conservative with this company. I've predicted revenue growth 30% next year. They previously grew the last period at 38%. And I've only predicted 20% for the next 2 to 5 years. Of course, they did the acquisition of Debenhams. They're also expanding to stores in the Middle East. So they're really actually expanding the company. They've got many different brands now. So filling in all those details, guys, I get a fair value for this company of £3.60 per share. Now, the stock's trading £2.60 at the moment. So it's looking around 22% undervalued at the moment. And also, guys, I want to bring to your attention this. There has been some insider buying quite recently. So 16th of June, Ian McDonald, who's the new CEO, he came over from Primark. He's purchased £326,000 worth of shares at £3.27, so just before the crash. So he's obviously not very good at timing the market. 49,000. So there's been a few small buys here also throughout the past year. Really, when Mahmood Kamani, this was back in October 2020 when the stock was falling, the founder of the company swooped in. He has skin in the game. He owns around 12% of the company. He swooped in and actually purchased shares in the business, £729,000 at £2.43 per share. So to me, that's when he thinks the stock has good value at £2.43 per share. Now, the stock's trading $2.60 at the moment. So yeah, you guys can do the maths and see what you think. Of course, guys, this is not financial advice, and this is an extremely volatile and controversial stock. So I think the way you could lose money with this stock is the next controversial statement comes out, the next fine comes out, the next scandal comes out, and you end up selling it on a low. That's the only way I can see you losing money with this stock over the next 2 to 5 years. But again, guys, not financial advice. Right, if you guys are finding value in this video so far, feel free to give it a big thumbs up, just like many of these celebrities are doing right here. We've got Borat here. We've got this guy here. Feel free, give this video a big thumbs up. It helps out the YouTube AI. I don't actually care personally. It's just the whole YouTube AI. I've got to play this whole YouTube game. But yeah, there you go. Okay, on to stock number 2, and this is Rightmove, ticker symbol RMV. And this is actually one of my favorite stocks in the UK because they have an absolute monopoly on the market, which is what I do love to invest into. They're basically the UK version of a stock like Zillow. So as you can see here, you can go onto Rightmove and buy properties and sell properties on there. Great website, very easy to use interface. I use them personally all the time. I do quite a bit of property investing, as you guys will know if you watch this channel regularly. So yeah, I use these guys all the time to buy properties. I use these guys to sell properties. Every estate agent I know in the UK uses Rightmove. So yeah, to me, it seems like a fantastic company. If we hop into the share price here, the numbers speak for themselves. From May 2008, the stock is up 1,594%. So this is over a 15 bagger. So this has made countless millionaires, this company has. And for good reason. It's an online marketplace to buy and sell properties. Simple business model in a growing, trending industry. So back in 2008, that was obviously fantastic to invest into. But even recently, there's been many opportunities. For example, there was a big dip here, May 2021. Since then, the stock's up a nice solid 25%. Market cap $6 billion. Dividend 1%. So yeah, great company overall. For hop into the valuation model, it's not really a fast growing company at the moment. They seem to have leveled off quite a bit. £200 million in revenue and 15% growth rate are predicted. Hopping into my valuation output. So my valuation per share for this company is around £5.26. Now, the stock when I first did this valuation was just 10% over, 8% overvalued. But if I hop in here, the stock's now £7.25. Now, the good news is I covered this stock on this channel many months back. I stated I was buying heavy in the stock. So congratulations to you guys if you did also, and you're up around, should be around 20-25% with this stock. And it's a solid play in the UK market. But Rightmove is still a great stock to put on your shopping list. And if there is a stock market crash, then you could load up the truck with that company. Okay, finally, stock number 3 on my list is Pershing Square Holdings. Now, this is Bill Ackman's holding company, which is based in the UK for tax reasons, I believe. So, market cap $7.54 billion. And this is basically like investing into an ETF, a basket of multiple different stocks. And I've watched many interviews with Bill Ackman, the great billionaire activist investor. And he always states his firm's trading below its net asset value. Of course, he is going to say that, but it very well could be. Looking at the share price here, it's up 34% year to date. They have stocks like Chipotle, they have stocks like Starbucks, I believe. They recently purchased Domino's Pizza. So they're not really investing into many exciting tech companies, but they're investing into a lot of free cash flow generating businesses with great sustainable competitive advantages and moats, which is what Bill Ackman looks for. But there is a very interesting development which has been happening with this company very recently. So the whole Bill Ackman SPAC, which should have actually purchased a 5% stake, I believe, in Universal Studios, that was actually declined by the regulators of the New York Stock Exchange, I believe, due to the complex nature of the setup. But the good news is, Bill Ackman actually stated he will purchase these Universal Music shares for the shareholders of Pershing Square Holdings. So you will also get a stake in Universal Studios if you invest in Pershing Square Holdings. And Universal Studios, having researched it, it is an exceptional company. They do have a strong competitive advantage and moat. They have the music collections of people like the Beatles, Queen, Rolling Stones, and even modern day artists like Drake and many more. So that's today's video, guys. Remember, if you haven't joined the investing family yet, feel free by hitting that subscribe button, turning that notification bell on. And if you do want to step up your investing game and ultimately become financially free, check out that first link in the description below for details on our investing strategy course. It only works out around $20 a month, so it's extremely good value. It's not some $5,000-$10,000 course, guys. You can also check out our VIP membership group for access to my live buys, sells, so when I make my moves, you can make your moves in the stock market. And with that being said, thank you guys so much for watching. I hope you all have an incredible day, and I'll see you in my next video. Invest safe.